In today's session, our distinguished speakers, Jason Riley and Kevin Murphy, will examine inequality, the challenges it poses to capitalism, and the best ways to promote opportunity for everyone. Jason Riley is a senior fellow at the Manhattan Institute, a columnist for the Wall Street Journal, and a commentator for Fox News. He is author of several books, including most recently the Thomas Sowell biography, Maverick. He is a recipient of the 2018 Bradley Prize. Kevin Murphy is the George J. Stiegler Distinguished Service Professor of Economics at the University of Chicago Booth School of Business. His research focuses on the empirical analysis of inequality, unemployment, and relative wages, as well as the economics of growth and development and the economic value of improvements in health and longevity. He's a MacArthur Fellow and winner of the 1997 John Bates Clark Medal. Our speakers will be fielding questions from the audience, so please submit your questions for them in the Slido tab. I'd like to now welcome Mr. Riley and Professor Murphy to the screen.
Thank you.
It is my honor to now hand things off to Jason Riley.
Okay, thank you for that introduction, and thank you, Kevin Murphy, for being here for this important discussion. I thought we'd just jump in. We don't have a whole lot of time, and it's a big topic to cover. So why don't the title is Inequality, Opportunity, and Human Capital, and I want to start with inequality. It seems to be all the rage these days. In recent years, we're constantly talking about inequality. And so my first question is, should we be as focused as we are on inequality versus, say, focusing on poverty or economic mobility? And I ask that because inequality wasn't always the focus of our policymakers and politicians and economists, frankly. Lyndon Johnson launched a war on poverty, not on inequality. The idea was to address privation, not worry about how rich the rich were getting. So are we overly focused on inequality?
I think so, in the sense of the term inequality. And think about it, inequality refers to the difference between how well people, say, at the top in some vague sense and those at the bottom are doing. And, you could think about it, if inequality was all that mattered, there'd be two ways to lower inequality, which would be to push down the top or push up the bottom. And if you look at the world from an inequality perspective, you might say, well, those are equally good ways. They're equally effective at lowering inequality. But I think anybody would pretty much recognize those are very different. It's not like we don't care about what's going on in the distribution of income, but I think the focus ought to be on raising incomes generally, and particularly raising income of those at the bottom. So poverty would be a better focus, or, focus on growth and improving outcomes for everyone, with a particular focus on those who are trying to work their way up the economic ladder, I guess is the way I think about it.
So how did we get here? Why did the focus used to be on poverty, and why has the language shifted to inequality? Because, as you said, if you doubled everyone's income, you'd pull a lot of people out of poverty, but you'd also increase inequality. I mean, which way should we be going?
Well, I think part of it's political. I think part of it is it allows for the debate to really focus on two things. One is, how well are people at the bottom doing, which I think a wide range of people across the political spectrum think is extremely important. But it also allows people to say, hey, look how bad things are. Guys at the top are getting richer. So I think a lot of it is politically motivated. And it's an expedient way to play on a fundamental human frailty, which is jealousy. That, and that sells politics. And I think that's unfortunate, because a lot of the policies could make some progress if we focus more on creating opportunity for those at the bottom. And, there are three terms in our title: inequality, opportunity, and human capital. I would say the two most important ones are the last two. Probably I would say human capital, number one, the most under-discussed part of our economy these days. And second is opportunity. And those last two go very much hand in hand. So I wish we'd talk a lot more about those
Okay.
and less about this notion of inequality.
We will. I just to finish the point on inequality, and this is, I think, an even more fundamental way to approach it, and that is, we talk about inequality as if equal outcomes are the norm. And by that, I mean, we assume that the natural state of things is random or proportionate outcomes, and that something nefarious must be going on where we don't find that. And so can you talk a little bit about the problems in bringing that mindset to a discussion of inequality? You're looking for bad guys for some possibly human intervention that has caused something, because you assume, but for that, you mentioned human capital. We want to talk about that. You're assuming there's some even that human capital is distributed evenly among all groups, and so we should have equal outcomes. I mean, but is that the right way to think about inequality?
I don't think so. I think, there are a lot of reasons why people end up with different incomes. And let me say, I think we talk way too much about income as the sole measure of inequality of outcomes, that, a lot of other dimensions matter a lot, family, health, things that are at least as important as people's income. So first off, we don't want to limit our discussion to income generally. But as you say, it's not the natural order of things for there to be equal outcomes across individuals. And indeed, increasing opportunity for everyone will often increase rather than reduce inequality of outcomes. And if you told me I'm going to give everybody more opportunities, some people will be better positioned to take advantage of that than others, either because genetically or, they happen to be lucky and be quite smart or quite physically talented or can sing really well or whatever it is. Some people are going to do much better than others. Some people are going to have advantages because their family invested a lot in them when they were young, really pushed them to do well in school or other things. If you increase opportunity for everybody, often that'll increase inequality. We see this in countries when they develop. The country opens up to the world, incomes go up across the board, but they go up the most, at the top. That is, a lot of people take great advantage. And you wouldn't want to say, well, geez, let's suppress that opportunity for everybody in the name of preserving equality of outcomes. Yeah. So I just want people to be clear on that often more opportunity might go hand in hand with more diversity of outcomes.
Yeah, and I'm glad you brought in the sort of international perspective here, because I think when we talk about inequality and unequal outcomes, we're not just talking about individuals. You can be talking about entire nations. Sweden is richer than India. It has been for a long time. What's going on? Is something fishy going on? Japan has almost no natural resources and is one of the richest countries on the planet. Venezuela is overflowing with natural resources and is a basket case, has to import oil to feed to run its own country. We're talking about human capital, but we're talking about resources that are not evenly distributed geographically, let alone among groups as well. So I think it's important to keep that in mind. But as you said, we should talk about the other terms in the title, and opportunity is the next one. And today, that word gets some people in trouble, and by that I mean, we used to say or think that the goal of the policymakers or the politicians was to provide equal opportunity. Whether people took advantage of those opportunities was going to be on them, but we wanted everyone to have an opportunity to begin with. today there's a debate about meritocracy, and opportunity gets you to meritocracy, and you see it in your field, in higher education in particular, getting rid of the SAT tests, to move us toward more equal outcomes. A slap at meritocracy. That is feeding inequality. Any thoughts on that debate?
Yeah, two things. I think, again, this is the flip side of what I talked about a moment ago, that people often read into an increase, say, or a high level of inequality of outcomes and say, that must be an unfair society. There must be that there's an inequality of opportunity. And I don't think that's certainly not necessarily true, and I think it's not even close to being usually true. And for the reasons I said before, there are differences that people have. You know, my family background versus another family background, those are real advantages that people have. Some people are born into a community with good schools. Other people are in a community with poor schools. So there's going to be some inequality of endowments. And in the name of increasing, inequality of outcomes, we've actually tended to reduce the equality of opportunity. So, for example, if I'm a young black man growing up in the United States, chances are I got a pretty lousy school district, and my children who have the opportunity to go to private school or to a public school in a different community in the suburbs, or move to a suburb that has better schools, that's the big problem we have right now is we say, well, we need everybody to go to a public school. Well, that's not equality of opportunity. That's not even quality of outcomes either, because we're giving them very unequal opportunities. And that's what bothers me more than anything today.
Okay.
And the other side I would put on that's very important for people, how did we get so rich? We've gotten so rich. And how did Japan get so rich? They took advantage of the skills of their population. They cultivated a very highly educated, fairly highly trained, a society that produced enormous increase in output. United States, all the developed countries. That's the key, is investing in your people. You don't have to necessarily have natural resources. And when you do that, you pull everybody up in the society. And we need to do more of that in this country.
Yeah, we spend a lot of time talking about why people are poor, but poverty is the norm on this planet. Most nations are poor. The question is, why are a few nations rich? That's the real question. But that gets us to the final term here, human capital. So you're an economist. What are economists talking about when they use the term human capital? How is that defined? How is it used?
Well, it's investments in people. And at its most fundamental level, human capital includes things like health. That is, your people are more productive, the healthier they are. That is, and early on in society, certainly very poor societies, improvements in health are a big way to improve people's human capital. They're just more productive, both on the job and at home, and raising children when they're healthier. The other component is elements of training or education. That is, increasing the education of the population. But it's not just about years of schooling. One of the key elements of human capital is a lot of people knowing different things. That is, you can combine the talents of different people in the population. And that's the tricky part for improving as a country. Because it's very hard to walk into a country and say, okay, I'm just going to train everybody. Train them in what? And it's not like everybody knowing the same thing is going to be the key to being successful. You're going to have a variety of knowledge out there. And that's where the free market comes in. Because people will naturally have a tendency to say, look, this is what's in demand. That's where I'm going to get my education, right? There's big demand for people in this field or people with those skills. And people are a lot smarter than we give them credit for. Whether it's people moving across countries or people deciding where they want their children to go to school. And I think we need to take advantage of that. So a freer market for education is one of the biggest things one can do to make that human capital investment process both productive and possible.
One of the arguments that economists have made, particularly more conservative economists, is that human capital and the development of human capital in a group can be maybe the most important aspect of that group's ability to rise economically. A tendency on the left is to say, well, discrimination matters more, or some external factor, society's treatment of a group matters more. But the pushback among free market conservatives is often, no. If a group has developed that human capital, it can overcome a lot of what's thrown at it in terms of discrimination or hatred from outside groups. And so you look at examples not only here in the U.S. of groups like, say, Japanese Americans who couldn't own land in certain states, were interned during World War II, suffered mob violence, lynchings, all of it, yet developed this human capital. They outperform whites. Or you look at, the Jewish example in any number of countries around the world, Eastern Europe and so forth. You look at the ethnic Chinese in Southeast Asia, same thing. Hated group, ethnic, minority, abused by the majority population, kept out of certain schools, certain industries, and so forth. Yet, in country after country in Southeast Asia, you see the ethnic Chinese excelling. Can you talk a little bit about that debate over the importance of human capital versus other factors that people point to in terms of why some groups lag and some groups excel?
Yeah, I do think, we've talked way too much about what we call, economists call physical capital. And you can hear it today often when we talk about, what the U.S. needs to invest in. And they talk about technology and physical capital, things like that. People are our biggest asset by far. And investing in people is a complicated process because human capital, the difference between human capital and physical capital, I always tell my classes, you take your human capital home with you at night, right? It follows you around. And when you invest in people's human capital, it not only improves their outcomes in the workplace, it typically improves their outcomes at home. They're healthier. They raise their children to do better. And so it has a very virtuous cycle element to it, that when individuals have more human capital, they tend to bequeath that human capital to their children. Even parents who give no formal cash bequest, the biggest thing they give to their children is the time they spend with them and the investments they make in those children, often when they're very young, before they get to school. And that's the other key aspect of human capital, is it's what we call cumulative. It builds on its human capital. What you do in the 10th grade depends on what you learned in grades 1 through 9. What you do in the workforce depends on what you did before you got to the workforce. What you do in first grade depends on what happened to you before you got to school. And so that process of human capital investment is so important because you need to keep it going, and it'll then carry across generations. And that's how groups, have proven that they can move up. Even groups, like you said, who were marginalized, who were said, look, you're not getting access. Well, I said, we'll get access because we're going to work hard at it. And, that's not limited to those. Black Americans made enormous progress in this country after being treated very badly for a very long period of time. They were able to increase their education, close the wage gaps on whites dramatically over much of the 20th century. And they did that. A lot of it was human capital. Yeah. It wasn't so much accumulating wealth. It was really accumulating human wealth. That is human capital. So it's not limited to Asians and Jews and all other groups, but it's been an important aspect. You see it with immigrants. Immigrants come to this country with next to nothing.
Yeah.
You find a kid who's in college, whose parents have a 6th grade education, they're almost surely immigrants.
Yes.
They're the children of immigrants come here and they're able to make it. Not because they have a lot of money, often have very little money. But what they had is they had a family, they had moved to a neighborhood where they could make that investment in human capital.
Yeah, I think you make a very good point there, particularly about Black Americans, and it's a part of Black American history that not a lot of people know about because activists and civil rights leadership and a lot of Black politicians don't talk about it. But that is the tremendous progress being made in the first half of the 20th century during the Jim Crow era, in particular in the 40s and 50s, when Black incomes were growing at a faster rate than white incomes, when Blacks were increasing their years of education, not only in absolute terms, but relative to whites. Gaps were closing. Blacks entering skilled professions at unprecedented rates and so forth. And we've seen, particularly since the 1960s, either a slowing, a stalling, or in some cases a reversing in course of those trends. And why that is might be a different debate, but that history is often ignored or downplayed by many people on the left today because it interferes with their narrative about slavery and discrimination being solely responsible for the outcomes we see today. And so recounting that history of Black progress sort of interferes with that facile narrative they have, and they don't spend a lot of time talking about it. So what is driving? What would you say are the main drivers of the inequality we see today? What's going on?
I think, well, first off, the growth in what I would say is an under-discussed element of inequality. Forget the super rich, forget the Jeff Bezos and all that. Just the biggest widening of differentials that I think is relevant for thinking about the economy is actually between what I'll call high-skilled workers, highly educated workers, and less educated, lower-skilled workers. The wage gaps between, a professor at a university and somebody working in a supermarket. That wage gap is, having done both over my career, I can tell you that wage gap is, many, many times what it was in 1980. It's expanded dramatically. And the question is why? Why is it that we pay, your successful, higher educated individual so much more today relative to your average working person? And the answer is the same answer that happens in most markets. It's about supply and demand. That is, the demand for high-skilled workers has been growing faster than the demand for low-skilled workers. But that's not new. That's been going on for hundreds of years. It's been going on. It's a part of technological progress. When we make technological progress, we tend to create new ideas that are complementary with skilled workers and substitutes for low-skilled workers. What happened in the last half of the 20th century, though, really since about the 1980s, has been we just haven't kept the supply up. And what's happened is we've had continued growth in the demand for high-skilled workers, slack demand at the low end. We've overcome that in the past by creating more high-skilled workers, that is increasing the supply of high-skilled workers and reducing the supply of low-skilled workers. That's how we kept the lid on inequality throughout much of the first half of the 20th century. What happened is we stopped really investing as much in our people as we needed to. And having looked at it, I can tell you the biggest culprit is the fact that our elementary, secondary school system just let a big fraction of our population down, did not prepare them with the skills they needed to be successful in the labor market. And if we had produced more high-skilled, more high-educated individuals, that would have pushed up wages at the bottom end through the simple force of supply and demand. And that's the most important lesson I learned working on this issue was this. If we can improve the skills of some, not all, even some of our low-skilled workers, that will help all the low-skilled workers, because with fewer low-skilled workers out there, one thing we know happens is wages will rise for those remaining workers. So helping some workers will be a good idea because they can take advantage of the widened differential, right? There's a bigger premium for getting educated today than there's been in the past. They'll take advantage of that bigger premium from increasing their skills. And that at the same time will help low-skilled workers that remain get higher wages. And
well, let me press you a little bit on pointing to the K through 12 system as a culprit here in today's inequality. What specifically do you mean here that system used to do that it no longer does or does as well? And how, what are your metrics here for reaching that? Is it how U.S. students perform on international tests? Is it that we send too many kids to college instead of into the trades to learn a skill? I mean, how are you evaluating this?
I would say a couple things. One is we can see it in terms of it's not so much about are we worse than we used to be. And that's not really the question, because we were getting better and better. Over the first part of the 20th century, we increased the skills of our workforce dramatically. That is, the number of people who graduated high school rose, and then the number of people going on to college rose. We brought an increasing number of people, highly talented people, who didn't have the opportunity to get high education, whether it was because they were in rural areas, they lived in the South. We did many things to improve the system. And in a world in which the demand for high-skilled workers continues to grow, and it's been growing for 100 plus years, in a world where that continues to grow, you have to keep getting better. It's not enough to say, I'm just as good as I was 10 or 20, 30 years ago. That's not going to cut it. And we stop getting better. And you can see it, for example, in terms of the success rate of people trying to go on to college. The number of people going on to college, the premium for college education, as I've shown in my research, went up dramatically in the 80s, and it's remained up for the last since the late 90s, early 2000s. Premium for getting a higher educated degree has gone way up. Number of people going to higher education, what do you think happened? More people went. When the return went up, more people went. But the number of people who actually graduated didn't go up very much, particularly for young men. The number of young men graduating hardly moved. Why? Because they weren't successful when they went to college. They weren't well prepared. So we have a lot of people out there who are poorly prepared to succeed in college, but also poorly prepared to succeed in the labor market. We've always had a lot of poorly educated people in this world. Trouble is, there was a lot more for those people to do 50 years ago than there is to do today.
Okay.
And the consequences of being poorly educated is much greater today than it was 50 years ago.
Okay.
And what we need to do is have fewer people in those ranks. We needed to continue to expand opportunity. Our second word, right? Our second word was opportunity. We need to continue to expand opportunity. We expanded it to people in rural areas. We expanded it to people in the South in the earlier part of the 20th century. We expanded it to blacks to a large extent. But have the opportunities for young blacks expanded in the last 30 years? I don't think so. I think they're trapped in many of the same failing school districts and schools that they were years ago. We have not continued that expansion of opportunity, which would build the human capital we need to keep our workforce moving forward, which benefits the most the people at the bottom.
Okay. Why don't we talk a little bit about how some people want to address this inequality? Some of the proposals people have put forward: universal basic income, minimum wage hikes, racial preferences, wealth redistribution. It seems to be, broadly speaking, is a popular approach to addressing inequality. What's wrong with that?
First off, I think, as I said earlier, it focuses way too much on one variable, which is income. And let's say I was successful. Say I could be very successful through a transfer program let's say I'm completely successful. I raise the income of one family to be equal to another. The only difference is in one household, people are working and earning a living. In the other house, they're getting the same income level because it's being handed to them through the government. Is that really equality? Which household would you rather grow up in if you were a kid? Which household is going to produce more successful more successful people going forward? That is, paying people not to work, paying people to not be active has never proven to be a very effective strategy in improving their overall outcomes and the outcomes for their children. I think it's just very unwise to go in that direction, because improving people's human capital as a way of improving their income, of keeping them active in the labor market, does a lot more than put bread on the table. It puts bread on the table, but it also creates a set of skills and talents and focus in their life that helps them not just do better themselves, but really helps their children do better. And so I very much think you want to try to do it through improving the talents of the individuals. And those people would feel better about themselves. They'll feel better about the outcomes, and I can guarantee you their children will do better.
Well, what about minimum wages? What about lifting the wage floor, expanding the earned income tax credit? These people are working, so you don't have that they're already incentivized to work. Why don't we simply force employers to pay them a little bit more money? Will that get the job done in terms of addressing or helping to address inequality?
Well, first off, it will do nothing to improve people's skills, right? That'll do nothing to do all these other things. If you could push up their wages, the alternative. Well, but say for some reason we can't do that. We're just going to push up minimum wages. First thing, minimum wage is going to reduce employment. It's going to force some people out of the labor market. And for those people who now can't get a job at that higher wage, and who are they going to be? They're going to be the least skilled among the population. Those are the people who are going to suffer. It's a very poor anti-poverty tool. A lot of low wage individuals are actually in high income households. Children of wealthier individuals often earn the minimum wage in part-time jobs and the like. And there's this insidious part of this. Think about an employer in suburbs of Chicago. In a tight labor market, workers are coming out of the city to work in those jobs, right? They're traveling on the bus or getting a car, or getting a ride, whatever it is, and they're working at those jobs because the labor market's tight. You raise the wage, and that employer, what's he going to do? He's going to hire the local kids from his own neighborhood rather than hire people from some other neighborhood. So who's going to suffer? It's going to be the people you least want to have suffer. It's going to draw some of those people into the labor market who have good outside alternatives and push out those with the worst alternatives. It's not a good anti-poverty tool. It also increases the cost of the goods and services those companies produce, which a lot of them are consumed by low-income households themselves. It's just really not a way to create wealth. It does nothing to make us wealthier and improve the individual or aggregate overall incomes. Whereas investing in our people gives benefits on all three margins, helps the person, helps the overall economy, and as I said before, raises wages for low people generally. If we can do it that way, it's a much more advisable strategy.
Wondering if you have any thoughts on the connection between crime and upward mobility. You're at the University of Chicago. A city that has a reputation as a rather violent big city, and what I'm getting at is that there is a belief that that poverty causes crime or drives crime, and I think the truth is probably closer to the reverse of that. Businesses flee crime-ridden neighborhoods. Jobs follow. Property values fall. We seem to be seeing an uptick in crime and violent crime in a lot of big cities. And I'm wondering if you have any thoughts on the role that is playing in the inequality, the social inequality we see in these places.
Yeah, first off, poor people are the biggest victims of crime. Yeah. As much as we want to say that, poor people commit crimes against rich people, they do some of that, but not much. Poor people are the biggest victims of crime. And when crime goes up in a neighborhood, poor people suffer on all margins. Well, number one, they're the direct victims of the crime. Number two, as you said, businesses leave, they suffer for that reason as well. And what happens is the people who come in and take advantage of the higher crime neighborhood, who benefits? from a higher crime neighborhood? Well, it's the guys who run the criminal organizations. It's the gangs and people like that who profit off of a high crime neighborhood. And when the police pull back and there's less policing in that neighborhood, those people can do more. They have more power. They have become more powerful. And that happens at the expense of people in those neighborhoods. Crime is not it. Let's go back to the minimum wage. You raise the minimum wage. Is that going to reduce crime? It's not going to reduce crime. It's not. It's going to, if anything, reduce employment of people in those areas, and that's going to have more supply of people who aren't working, and people who aren't working are prime targets to be recruited into criminal activity. If we wanted to reduce crime, the war on drugs has been an enormous leader in terms of generating crime, and it would be, we're starting to maybe talk about trying to figure out a way to have a more sane war on drugs. It's a tough question, but there's no question that whether you're thinking about crime within the United States or international crime, the drug war takes a terrible toll.
Okay, why don't we before we go to audience questions, maybe try and end this on a happier note. Under the previous administration, we saw some reductions in income inequality and social inequality in these countries, pretty dramatic. They didn't get a lot of coverage in the media. I think the media was pretty reluctant to give Trump credit for anything, and so they didn't talk about this a lot. But the reality is that poverty rate among Blacks and Hispanics fell to historic lows. Unemployment rates were at historic lows for these groups. And incomes, wages of people in the working class were rising at a faster rate than their bosses' wages. What was going on? And do you see this as a blip? Did you see it as just a continuation of what was already happening under President Obama? Or did you see something in policies put forward by the Trump administration that helped to reduce income inequality to the extent that it was being reduced prior to the pandemic?
Well, I think it was, first off, if you look at the most direct cause, it goes back to what I said earlier. It's supply and demand. And I've talked a lot about how do you raise wages at the bottom? Well, you reduce the supply of people at the bottom, that'll raise wages. The other side of that, of course, is greater demand has the same effect, right? Because reducing supply, increasing demand has the same effect. Increasing demand at the bottom was the story that, supply was relatively tight, partly for reasons we don't like, which is a number of people had left the labor force and remained out of the labor force. That's not good, but it does reduce supply. But that was a very strong demand period, part of it due to Trump's policies. That is, there were policies that reduced regulation, reduced taxes, and did things to encourage people to expand hiring and hiring more workers, and the labor market became very strong. And when the market becomes stronger, the biggest place you'll see it is at the bottom. That'll raise wages for those at the bottom of the ladder. So those pro-demand policies, I think, were good. That is, in that sense, that they raised wages at the bottom. But over the longer term, technology is going to be the driving force, and we're going to continue to have technology driving toward more and more demand for higher skilled, higher talented individuals. And so we need to work on the supply side, I think, in the long run. But those demand policies were clearly, I think, a good thing. And, I think it took some people by surprise because it had been a long time since wages had been rising rapidly at the bottom of the distribution, but not unexpected in a world in which demand was very strong. Okay. Wages are going up right now. Unfortunately, it's largely, I think, it's for both reasons. Demand is recovering, And we're doing a lot to reduce supply by encouraging people not to work.
Yeah.
That's not a very positive way, though, to raise wages. Much more positive wage would be to say, instead of paying people to stay home, let's invest in their skills so they can move up the labor market, still be in the labor market, and get those same higher wages at the bottom.
Yeah, I think you're seeing some acknowledgement of the disincentives that this supplemental supplemental unemployment benefits are providing in the Biden administration announcing that they're going to phase them out in the fall. I think is an acknowledgement that they're in the way. They're in the way of people returning to work. So I think we are going to turn it back over to Yael for some questions from the audience.
Thank you to both of you for that very fascinating conversation. I have a good question here from our member J.R. Scott, a good follow-up question to the discussion that you were just having. What is your opinion of the recent hypothesis advanced by Larry Summers that a decline in worker power can explain the rise in income inequality since the 1980s, as well as a number of other economic trends like declining labor share, higher corporate profitability, low unemployment, and low inflation?
I'll let the economist refer.
I don't think I would agree with Larry that that's the focus driving it. That I think workers, particularly low-wage workers, have had less bargaining power, but that's more the outcome of the supply and demand balance that I talked about before. It's like saying, well, oil producers have a lot less bargaining power when we have a glut of oil, and yeah, in some sense they do, but it's not because something caused them to wake up in the morning and not be as good at negotiators. It's really because the market conditions weren't so good for them. So I would put much more of the focus on the supply and demand factors that underlie who has the upper hand in wage determination. So I would put much more emphasis on the fundamentals. And when I've looked at it in the past, and when I've looked at it over a number of decades, it really is those supply and demand factors that are the greatest explanatory power for what's going on with wages at different levels.
Great, thank you. I have another question for Professor Murphy. Can you expound on what changes you'd like to see to our K-12 education system to better prepare Americans for both college and the labor market?
I think more choice. I think there's no question that we benefit from more choice. Increased expansion of charter schools, if we can, to the extent we can move in the direction of more vouchers and things like that. The thing about it when you look at the labor market is people know they need more skills. All you have to do is watch late night TV. If you watch late night TV, used to see when I was a kid, Ginsu knives and all kinds of kitchen gadgets were the rage on late night TV. Now when you watch late night TV, University of Phoenix, all kinds of other investment opportunity. People know they need more skills. Problem is they don't know where to get them, how to get them, or whatever. And we need a better market out there to help people get the training they need, whether it's training for college or training to get into jobs. And choice is what will give that to people. We have too many people trapped in failing schools. And choice will force those schools to improve, as well as open opportunities for people who want to take advantage of it. And I think people miss the boat when they say, oh, choice is bad because all the people who can take advantage of it leave, and that just is bad for everybody else. They're just completely forgetting about the supply and demand part of the market. That getting more people to do well, focus on those people you can help. And if they get help and they move up the ladder, which is what we've done for decades, that's how we were successful. We were successful in improving our workforce by expanding opportunity to more and more people out there. We kind of stalled on that. We stalled on expanding opportunity, and opportunity flows from choice, the ability to choose what I do next. And believe me, you don't have to be paternalistic to people. Those poor families, they care about their kids like we do. They want to improve the outcomes for their kids. You see a new successful charter school opens up, what do you see happens? There's a line around the block to get into that school. And often those are poor people, many of whom themselves don't have high levels of education, but they know their kids do better than them. And I think you give people the choice the vast majority of people take advantage of it.
You know, I would just add, the reason we don't have more choice is because of the teachers unions and their political power in protecting their basic monopoly on public education in this country. And I'm hopeful that the experience of educating kids under COVID might force some people to rethink how much power these unions have over public education, and by extension over our lives. If our kids can't go to school, we can't go to work, and a lot of people that became very obvious to them during the lockdowns and during the pandemic, the reason that these schools are disliked by the unions is obviously because they won't organize. They're not allowed to organize a lot of these schools. But the schools themselves have proven that they can do a good job of teaching, particularly these underprivileged groups, and are, as Kevin was saying, hugely popular among these low-income groups. I think the wait list in New York City, where I'm based, is around 50,000 kids long. And then this whole idea of them creaming the best students is also something not supported by the facts, because these are lotteries that these schools use for admission. And as with all lotteries, more people play them than win. And so the vast majority of more motivated kids are not in charter schools. They're in the regular public schools because they didn't get into the charter schools. And then you have to ask, what are the regular public schools doing with these kids? And they're not doing much with them. So school choice, I agree wholeheartedly, is going to do a lot to address these problems.
Great. Another question here on the topic of education from Merrick Mitchell. What does Professor Murphy think about a year or two of free community college? Are community colleges the main engine of human capital in the United States?
I don't know. I wouldn't say they're the main engine. They're one of the components of human capital investment. I don't think free is the question. I think we want college to be affordable for people. I think it's great when people have skin in the game and they're paying part of the cost. That gets the people who feel like they're going to get the most out of it to go. The people you would attract at free that you don't attract at reasonable are probably not the people you want to get to go to college. I think we really want to say, is it something that people can afford? And secondly, are they teaching what we want to teach? What those students need? And unions are not limited to K-12. We have a lot of unionization even at the junior college level. And one of the things we want to make sure is that those colleges compete for students. That's the thing. Competition. My mentor Gary Becker used to always say, as free market economists, we like to talk about private versus public. But he always said, look, the more important thing is competition. You want to have competition, whether it's publicly supplied or privately supplied. Competition is the key. Monopoly is your enemy. And if somebody has the monopoly, it doesn't have the incentive to compete for those students, they're going to get captured. And in an education context, who do they get captured by? The biggest other constituency, which is the teachers, right? Because if you're not captured by your customers, somebody else is going to capture the monopoly. And in this case, it's likely to be the big other group, which is the teachers. And that's not good for students. And that's where school choice and competition comes in. And I think that applies at the junior college level as well. They should be fighting for their funding and fighting to get students to bring them their dollars, not say it's free no matter, even if you do a lousy job. I think you really want them fighting for the dollars. I'd rather see some kind of voucher program or something where the schools are competing for students.
Great. I have a question here for both of you, and I can send it to Jason first, from Art member John Baldridge. Immigration and its relationship to the labor market outcomes are frequently debated in political and academic circles. What are your thoughts on this relationship?
Wow, that's a big question. I think on balance, immigration is good for the country. The trick is to make sure people are coming for the right reasons, and if they're coming to work, if they're coming to improve their lives of their family, we should want them here. We should want them here, and that's why I've long argued for some sort of guest worker program, hopefully with a pathway to citizenship at the end if the person wants it. But illegal immigration to me is a supply and demand issue. There are more people who want to come than visas available, and so the ones that can't come through the front door sneak in. But as long as they're coming for the right reasons, I think we want them here. I think we do have a dated system. It needs to be reformed. It was set up for a different kind of economy than we have today. Maybe we should reevaluate, the family ties as a way to let people in. Maybe we should take into account education and skills and so forth. Find a right balance there somehow. I think that is worth revisiting. But on balance, I think it's a net good. It's a net good for us, and I'll start to worry when they aren't trying to come anymore. That's the time to start worrying.
Yeah, Jason really hit it nail on the head. Immigrant. I'll be a little stronger even than Jason. Immigration is a great thing in general. That doesn't mean it's always good, but in general, it's a good thing. And it's a good thing because when people come here, like Jason said, because they want to succeed, high-skilled immigration is, in my mind, a no-brainer. High-skilled individuals come to this country. They come here to work. They come here to invest. They come here to create jobs. I mean, high-skilled immigration is across the board, pretty easy sell. When I go to a cocktail party or something, I have to talk to people about immigration. Convincing them high-skilled immigration is a good idea. It doesn't take very long. Low-skilled immigrants is tougher because it got the supply and demand story I talked about earlier. But the thing you have to remember is immigrants are self-selected when they come here for economic reasons. They come here. Why would you go to a place where people don't like you? You go there because you want to succeed, because you want to come there in spite of the fact that maybe you're not going to be as welcome as you might otherwise. You come here because there's opportunity, and not just opportunity for you, but opportunity for your children. And you can see that in the history of immigration to this country and other countries. The immigrants that come in tend to be very positively selected, we say in economics. They come in with a lot of initiative. So even though they don't have a lot of human capital, they have a lot of initiative. And you'll see their kids do way better than they do as their kids take advantage of the opportunities here. So I think immigration is good. Jason's right. Family unification and other criteria are probably the wrong criteria to be using. Economic immigrants are generally our friend. They come here because there's opportunity for them, and that opportunity is good for us as well. So I'm very bullish on immigration.
Great. And for our last question from the audience for this afternoon, another tough one. Do you think that Glenn Loury's concept of social capital, which suggests that skills and earning potential are highly dependent on family and community background, is a useful generalization of human capital to understand the persistence of racial inequality?
Human capital is produced, we tend to think of education in schools as the key producer of human capital. But as much as important as those things are, home is, that's where you learn first. And that's where you learn in companion with going to school. And that's where you get support when you get out of school. So the family is an incredibly important part of building human capital, at least as important as formal education. And, one of the scary things about today's world in terms of inequality is that the children in high income to college educated households are getting a lot of time and attention from their parents, more time and attention than many of the kids in lower income households. You talk about perpetuating inequality, that's a big problem. You really want to think about the household and social capital, as Glenn Lowry calls it, as an important component, because human capital is produced as much in the household as it is in the market.
Jason, would you like to weigh in?
I don't disagree with anything Kevin said. I just to reiterate his point about what these kids are what happens at home being more important. I always think of those word count studies that are done. How many a child from a working class family versus a child of professional parents versus a child of family on welfare. The words per hour heard at home vary dramatically, to the point where after a period of time, a 3-year-old child of professional parents will have heard more words than a 10-year-old child of a family on welfare. And you think about how early that starts. Most middle class kids come to school on the first day knowing the alphabet. Most lower income kids do not. These things compound over time, and I think about these debates we have over whether the SAT is racist, as if by the time a 17-year-old sits down to take the SAT, but my goodness, this is baked in. Why would you expect these results to be proportionate by race and economics, given how early these differences begin? And then the idea with affirmative action that, we'll solve it with a few remedial classes freshman year. No, you won't. So it goes back to what Kevin was saying about K through 12 education, where we really need to be focused if we want to do something about social inequality in the long run. And I agree wholeheartedly, it's got to start at home.
Great. Well, that's a hopeful note for us to end on. I want to thank you wholeheartedly for joining us in this very important conversation. I know I really enjoyed it. Our members really enjoyed it, and we really appreciate you being here. And I want to thank our audience for tuning in today and joining us.
Thank you.
Thank you so much. It's my pleasure.
We've been running polls during this event. We'd like to go through our polls right now. Can we get the results of the first poll on the screen, please? What matters more, equality of opportunity or quality of outcome? 87% of our audience understands opportunity to be more important than outcome, but important 32% thinks outcome